Welcome back to another episode of the Wilson Weekly on the Money Mentor podcast. We're talking inflation is fun, facts are fierce, and the property chat is hotter than the current Brisbane auction rates. I'm Rachael Howlett, and I'm joined once again by everyone's favourite economist, Dr. Andrew Wilson. We're diving into the latest price moves, inflation data, and those booming auction results. So grab your coffee, maybe a fan, because the market still seems to be heating up, even though we're going into winter, Doc.
Yes, we are going into winter. There's no doubt about that. I'm down in Melbourne today, and it's drizzly and grey and cold, and I think Sydney's very, very wet at the moment, and it's a bit windy up there north of the Tweed. So it is winter. We can expect that for sure. But yeah, still plenty of heat in our property markets, and we shouldn't be surprised. Lower interest rates always drive higher prices. We've got the latest price data today, hot off the press. It's the June quarter house and unit prices. No surprise, prices continuing to rise, and plenty of confidence and plenty of heat about our property markets just at the moment. We are moving into the quieter middle part of the year. Of course, it is the winter selling season, July sort of into August. School holidays have started just about everywhere, and we sort of hit the semi-pause button in those middle months of the year, those mid-winter months. And we do tend to see a lower proportion of higher priced properties coming into the market during the holiday period mid-year. And that does put downward pressure on prices. But but we'll start talking about the spring selling season anytime soon now, Rachael. About a month's time, we'll start thinking about that. But what a great springboard into the spring selling season this year if you're a seller, particularly because we've had a tremendous result with our latest auction results to finish the month of June. As I said, we are going to move into the quieter period, fewer auction listings coming through the market, but clearance rates are actually rising, Rachael, which is quite interesting.
I was surprised to see it.
So no sign of fewer buyers, in our marketplace. Listings were also held up in that last month or that last week of June. So plenty of positive news out there. And of course, we've got a Reserve Bank meeting next week on interest rates. Not so sure we'll get a cut in interest rates again. Well, it might be a line ball because we're going to look at our latest inflation data, which is very good news in terms of at least maintaining interest rates where they are. So good news on the inflation front may mean the Reserve Bank might be happy to cut again. Certainly the inflation number is running in favour of the Reserve Bank's a little bit more dovish attitude towards interest rates. And we had some interesting news out of the US just today in relation to interest rates. We'll discuss that as well. But enough of the preamble. Let's get on to the real data going forward, shall we, Rachael? And of course, My Housing Market is our brand. We act as independent commentators and data providers for the housing market. We bring you this podcast every week in conjunction with the good folks at Infinity. Of course, they're there to provide you with the best in terms of financial advice. We've been working with the Infinity Group now for a number of years, and of course, they're onwards and upwards in terms of their corporate profile. So every week, the Wilson Weekly is brought to you the latest in all the information you require for your decision-making in the property market. And of course, we are all about the current state and future prospects of your housing market. And that's why we bring you all this latest information every week, so you can, really make an informed decision on property. So all we say here is evidence-based. So it's a clickbait-free zone, Rachael, as you know. And it is all about making good decisions on property with the latest and the best data. So My Housing Market, let's move forward in terms of what we're going to look at this week. Of course, it is the week ending Wednesday, July the 2nd. Happy New Year, everybody out there. Of course, it is the new financial year, so we can say Happy New Year. And we're now so Happy New Year, Rachel, and so I hope you haven't over celebrated. No, I'm sure you haven't, but we are now moving into the second half of the year. Of course, we're on the slide downwards. The good news is that we'll get a little bit more sunshine during the day as the days get longer gradually, and of course we'll get eventually a little bit more sunshine in terms of heat as well. So we're not talking to people about buying Christmas presents just yet, but I guess we could start thinking about that because we're halfway through the year. So the week to Wednesday, July the 2nd, as Rachael mentioned, we're going to bring to you the latest house and unit prices for June, the latest May inflation data from the ABS, and the latest, as we do every week, latest weekly auction results, which were, as Rachael did say, were pretty spectacular, really. So those auction clearance rates are a great forward indicator of what's happening generally with our housing markets. And gee whiz, it's onwards and upwards in terms of housing market activity, reflecting what's happening in the latest auction results. So auction results to end the show, but to start the show, the latest home prices. And here we go, Rachael. So home prices over June, that should read rise as interest rates fall. And those prices have continued to surge really since February when we had that first rate cut this year, first rate cut in 4 years, and then a follow-up in May. So it improves affordability. So it means you can, with a lower interest rate, if you have a mortgage, you can pay more with a given income for a property because you can borrow more with that lower interest rate on a given income. And of course, all that puts together increased confidence. So higher confidence, lower interest rates, and that means increased affordability, and that means higher prices in a market that's chronically undersupplied, as we know our market is. And those positive results have flowed through all the way from February, where we did have some, as we usually do at the beginning of the year, some seasonal impacts in the market, January, February. But once those interest rate cuts have kicked in, we've seen, no surprise, higher prices, and that has continued over June, reflecting on the growth we saw over the May quarter. So here's the national weighted average capital city house price model, and that shows we've had 4 rises in a row, March, April, May, and June, and certainly starting to accelerate that growth levels. Of course, what we measure here is a 3-monthly period of house prices. So we measure the house price data over a 3-month period for each month. So then we advance it month by month. So we're getting lots of observations, so give us a robust model of the market, but we're seeing how the monthly trend changes. So it's a very reliable way of understanding what's happening in terms of price outcomes in our housing market. So let's have a look at the capital city breakdowns over June. All our capital cities, with the exception of Canberra, recorded higher house prices over the June quarter compared to the previous May quarter. Top result there, and this is really interesting, Rachael, was Perth. Again, top of the pops, Perth. We sort of got a bit sick of saying that last year and into early this year, or particularly last year, because that Perth housing market was a booming market. But it did come off the boil a little bit, Rachael, as we have discussed towards the end of last year and into this year. Very strong prices growth had created affordability barriers, and a lot of buyers had satisfied their buying decisions. But those interest rate cuts have seen the Perth market come roaring back, with prices the strongest growth over the June quarter compared to May, up by 2.2%. Second was our old favourite, of course, that Brisbane market, Rachael. Brisbane just keeps on keeping on, up by 2%. No sign of a slowdown in that Brisbane market at all over recent years, up by 2%. And then we had the smaller markets, Darwin and Hobart, have actually been producing some very consistently higher results over the past 6 months, following on what's been a quiet period for both Darwin and Hobart. So Hobart up 1.3% and Darwin up 1.2%. So some strong results there again for Hobart and Darwin. Melbourne and Sydney, solid results there. Sydney up 0.7% and Melbourne up 0.5% over the month. And as I mentioned, Canberra, the only market to record lower house prices over the quarter compared to the previous monthly quarter, down by 0.7%. So I sort of draw your attention, Rachael, to what's happened over the past year in terms of house price growth. And the interesting thing here, when we look at some of the trends, is the Melbourne market, Rachael. So the first time in some time, we're now seeing Melbourne house prices tracking higher than what they did a year ago. We know that the Melbourne market went through a lengthy period of subdued growth, particularly compared to the other capitals that were firing on all 8 cylinders. The Melbourne market really was a flat market over the past couple of years for a number of reasons. But we're now starting to see a rise in the Melbourne market, up by 2.3% over the year. Obviously, compared to most of the other capitals, that's nothing to get too excited about. But it is when we reflect on where that Melbourne market has come from, finally showing green shoots. And we'll sort of look at how that is reinforced by the latest auction results, Rachael, which were very strong for Melbourne over the past week. So Melbourne back in town. But again, when we look at the annual growth, it is that Perth market that's leading the charge again, following, as I said, that subdued period at the end of last year and into this year. Perth has come roaring back, up by 11.5%. Median prices for houses over the quarter compared to the previous monthly quarter. Adelaide up 9.8% and Brisbane up 9.1%. So it's the big three continuing to be the big three over the past year with near double figure results. Sydney up 4.6%, and as I said, Melbourne up 2.3%. And Hobart and Darwin now starting to look a lot stronger. Hobart up 5.9% and Darwin up 6.5% over the year. But hey, look at these numbers over the past 2 years, Rachael. I mean, this is really big news for homeowners in those big 3 capital cities in terms of growth, Perth, Adelaide and Brisbane. Perth up 40.7% over 2 years. That's a massive increase in capital growth that those homeowners generally have experienced in Perth, and on the rise again, Rachael. And we saw Brisbane just under 30% increase over the past 2 years in Brisbane, and nearly 30% also in Adelaide. So some extraordinary results there still with those the big 3 capitals of Brisbane, Adelaide and Perth. So the house prices continuing to rise, Rachael, accelerating if anything, and certainly the national price, the national weighted average median house price has accelerated over the past 3 months. And of course, if we do get an interest rate cut next week, that'll just pour more fuel onto those flames of rising house prices, if I could wax lyrical in sense of that description. So that's houses. Let's have a look at units. Similar story with units, although units have actually performed better in terms of the national model this year. We've actually had 5 consecutive increases in median unit prices in terms of the weighted average capital city model there, and up by 0.6%, the national unit price, a little bit lower than the 1% increase that we recorded for houses. Although Hobart and Darwin have been revival performers in houses, they went backwards in terms of units over the quarter, down by 3.7%, Darwin units, and Hobart down 3.4%. In the case of Hobart, it is a smaller unit market, so those numbers tend to be volatile. But all the other capital cities recorded higher unit prices over the June quarter compared to the May quarter. Top performer there. Hey, guess who was top performer again, Rachael? Yes, it was the Perth market, up by units again. Here we were thinking they were a bit of a dead duck, the Perth housing market, but no way, no one. It's strengthened again across the board, up by 2.1% for units. It is a smaller unit market, Rachael, Perth, so it does tend to be a little volatile from period to period. But nonetheless, good strong result there for Perth, matching what happened with houses. Adelaide up 1.1%. Canberra moving in the opposite direction to houses, up by 1.2%. A solid result there for Brisbane and Sydney, 0.7%, 0.8%. And Melbourne just flatlining a little bit for units, up by 0.1%. When we again look at the annual growth levels, very evenly matched between Brisbane, Adelaide, Perth and Hobart, with Brisbane, as usual, the top performer for unit prices over the past year, up by 15.9%. Melbourne just teasing us a little bit about moving into the black again on unit prices over the year, as it has for house prices, down by just 0.3%. But my expectation is that it will follow houses sooner rather than later and start moving into back into the black in terms of annual growth for unit prices. But again, when we look at the 2-year period, we have some phenomenal results here. Look at that Brisbane unit market. Units in Brisbane have now increased. The price for units in Brisbane, median asking price is up by median sale price up by 45.1%. That is a remarkable result. And, just shaded or just shades Perth, just that was up by 44.4%, Adelaide up 33.9%. Those are just truly extraordinary numbers, Rachael, and for unit growth. And certainly if you are a unit owner in Brisbane, Adelaide or Perth, particularly Brisbane, you got to be pretty pleased with those sorts of results, So really no sign of weakening there over June. It is sort of the last gasp of the notional autumn selling season, which runs through to the end of June. As I mentioned previously, Rachael, we are now entering into that midwinter period, quieter period. School holidays, I think, have started everywhere now, just about everywhere. I think Brisbane was the last off the rank, or Queensland was the last one to go in terms of school holidays. Maybe they're yet to go, but certainly it is that quieter period of the year now. But a great springboard into the spring selling season when it does eventuate in around about, it starts to evolve in around about 6 weeks' time. So great results, Rachael, again for homeowners. Not surprising given lower interest rates. And this is the scenario that we have lower interest rates with a strong economy. So it's sort of the big two whammy that will always mean higher house prices going forward. And that's how it's panning out now. So I guess all eyes turn to the Reserve Bank next week just to see if they'll give homeowners another little present in the middle of the year. I'm not so sure about that, but you never know. They've been more likely to cut than not, the Reserve Bank, in recent months. So we await that decision going forward. Now, Rachael, if you've missed our full report, the My Housing Market June quarter house and unit price report, we've got a QR code up on the screen there, which you can get a copy of. If you scan that code, it will give you a link to a PDF copy of the June house and unit price. So, hey, what did you think about that, Rachael? Some pretty good news there for homeowners. And really, I don't think there's any surprises there in terms of the result, but onwards and upwards with our housing markets.
Yeah, absolutely. I mean, we're really seeing Brisbane leading the charge there. What's driving the momentum? I mean, we can see Sydney edging close to a $1.7 million median. Are people leaving for more affordability?
Yeah. Well, that's the point now. We're really seeing, even though Melbourne's reviving, Brisbane just keeps on keeping on. And when we look at the long-term charts for that Brisbane market, there's just no dips or troughs. It's just upwards and upwards over the last 3 years. And migration's still strong into Brisbane and confidence is super strong. We can no longer, I guess, say that it's got significant affordability advantages, particularly over Melbourne, because it's now less affordable than the Melbourne market, although there are measures and there are measures. But certainly, on a number of measures, the median price in Brisbane for houses is now higher than the Melbourne price. Who would have believed that? But it hasn't acted as a barrier so far. Strong economy, strong migration, and almost insurmountable confidence, in the Brisbane property market. And it's not just Brisbane. We're seeing that same energy working its way all the way up the eastern seaboard. So good news for Queensland, good news for Brisbane, good news for homeowners. And unfortunately, I suppose it gets a bit tougher to get into the market, particularly if you're a first home buyer in those areas where prices are accelerating as they are at the moment. So I guess there's always winners and losers. But first home buyers, at least, I guess, have the opportunity for that new government handout that was announced as a result of the previous the recent election campaign. So shall we have a look at inflation now, Rachel?
Yeah,
which is important.
Let's get into it.
Let's get into the heavy duty stuff in terms of inflation. So as we've already mentioned, the Reserve Bank are meeting next week to decide where the direction of interest rates will go over July. And the good news for those that are hoping for a cut, which is, I guess, just about every mortgage holder, well, it'll be every mortgage holder, is that we're still seeing inflation falling. And that's been the main go-to measure for the Reserve Bank. It has said that it was prepared to cut rates until we got to the target range for inflation, their target range. And we're certainly well and truly within that target range. So the latest monthly data, this was for May from the ABS, saw headline inflation. And of course, Rachael, as you know, we have two measures of inflation. We have headline inflation, which is the overall measure of all the basket of goods that we are supposedly purchasing in terms of the ABS model. And then we have underlying inflation, which takes out the volatile elements, those that are subjected to seasonal effects, such as food or fuel. And those volatile elements are eliminated from the underlying measure. And that's what the Reserve Bank uses as its preferred measure. So the headline inflation, good news, down to 2.1% from 2.4%. And underlying inflation was also down to 2.4% from 2.8%. Of course, the range for the RBA underlying inflation is between 2 and 3%. So, hey, we're right in the middle of that now, Rachael. So They've sort of hit their target. They've said they've got to stay there. It's got to be sustained. Okay, it's not just to be a one-off, but certainly they'd be pretty happy with what's happened. The interesting thing was that what's driven inflation downwards since we had that sort of outbreak driven by all that stimulus that we got during COVID has really been a fall in the price of oil. And the other big contributor to lower inflation has been a fall in the price of electricity. Now, the price of oil has fallen because it was at super high levels. Eventually, it's fallen back to a bit more normal levels, and that's out of Australia's control to a large degree. But the fall in electricity prices, which is a substantial contributor to inflation, has been due to the government's subsidy, the handout that they announced last year, which has acted to crash the price of electricity and put a significant downward pressure on inflation. It's interesting, Rachael, it didn't actually have the same contribution with the May result compared to the April result. In fact, even though electricity did fall over the year, it was down by 5.9%. So that's telling us that the price of electricity fell by 5.9% over the year to May, but it actually fell by 6.5% over April. So even though it was a fall, it wasn't a sharper fall. Now, the same deal with fuel prices, which have been important to getting inflation under control. We saw a fall of 12% in oil prices over the year to April, down 12%. But the year to May, they were still down, but they're only down by 10%. So not a strong contribution there from oil and electricity in May compared to April. But we did see rents falling from a rise of or rising by 4.5%, which was lower than the rise of 5%. So all in all, that meant that the inflation rate was lower, down by 2.1% compared to 2.4%. You can see those changes there. Just a not as strong a contribution to electricity and fuel, but a better contribution from rents. And there's the inflation rate falling. You can see there how inflation has just come down and down and down since those peak levels in 2022, which were the highest we'd had since the early 70s. Our interest rate is now about 1% below the US interest rate, and our underlying inflation very similar to what the US inflation rate is. We had some news out of the US today. The governor of the Fed, Powell, in the US, has said that if it wasn't for the tariff policies proposed to be introduced by the Trump government, he actually would have cut interest rates earlier. So sounds like a bit of politicizing there going on from the head of the Federal Reserve in relation to what's a big debate about whether Trump wants to or would like to remove him because he hasn't been cutting rates. But nonetheless, our rates are around about our inflation rate is around about the same as the US, but our interest rates are around about 8% higher. We can see there, as we always mention here, the relationship between the price of fuel and an inflation rate. It's certainly fallen away and followed the track of inflation, or inflation has followed the falling away of the oil price. We've had a spike over June, which was caused by concerns over what was happening in the Middle East, but latest data has shown that that's settled down now, so we can continue to see a positive contribution from lower oil prices for our inflation rate. We can see there, even though the price of oil is still falling over June, because we know what's happened over June, it's not falling at the same rate as we've seen in other months, but still a positive contribution to lower inflation. And we can see there how oil has moved from its peak back during the height of the COVID stimulus period, where inflation was skyrocketing. It's now about half of that. But if you look at the latest part of that chart, Rachel, you can see how that oil price spiked during the US bombing of Iran a couple of weeks ago, but has since settled down and will likely continue to settle down, as that seems to have settled the issues in the Middle East, at least over the shorter term. So that's our I guess market update for this week, Rachel. Good news on house prices, good news on inflation. So I guess we're waiting for the news on interest rates next week, which will bring you hot off the press, of course, with our latest podcast. So let's have a look at those weekly auction results, shall we? As we've already alluded to, we've given a lot away. That was a very strong finish to June. Clearance rates were increased across the board, and Sydney, Melbourne and Adelaide, Rachel, are now approaching boom time results. Now, what's a boom time result in the auction market? It's around an 80% clearance rate. Once we start getting 80% plus clearance rates, we tend to see better than double figure price growth in those auction markets. And we're now starting to see approaching those results last week. It shows just how much competition there is out there amongst buyers for properties that go under the hammer in these capital cities every week. And as we've said, we're closing out that national autumn selling season with strong results. It will be quieter over the next few weeks, the next month or so, with school holidays, and listing numbers will fall away. But it's certainly a good setup for that spring selling season, which starts to emerge in the middle of August. So here are the results. Sydney auctions, similar to the week before. Clearance rate, similar to the week before, 76%. That's clearly in favour of sellers, that result, that proportion of properties selling under the hammer, and around about where it was a year ago in terms of numbers, but higher again, the clearance rate in Sydney compared to a year ago. Have a look at Melbourne, Rachel. 77.3% clearance rate. We haven't seen clearance rates like that in Melbourne for years. It was the highest clearance rate of any of the capital city markets. That's, I think, the fifth time we've seen Melbourne in the last few months actually have the highest clearance rate of all the capital cities, weekly auction clearance rate of all the capital cities. And again, we haven't seen those sort of results for years in Melbourne. Well ahead of, significantly higher than a year ago, with auction numbers around about the same. Brisbane also had a stronger clearance rate. As we know, that Brisbane market tracks around about 45 to 50% because it has a lower proportion of auction activity compared to the other capital city markets, and it has a different marketing stance in terms of auction campaigns. Adelaide also starting to pick up again. We saw higher prices coming through in Adelaide. It's now starting to record the sort of clearance rates it had last year at this time, and certainly has picked up from a weaker start to the year. And Adelaide still teasing us, Canberra still teasing us a little bit in terms of a revival in that Canberra market. It looked like it was starting to push ahead over the past month or so, but just pulled back a bit under 60%. So let's have a look at the trends. Sydney certainly higher than where it finished last year and over compared to the same period last year. Still a strong market, that Sydney market. Whoa, look at Melbourne. It's really burst out of the blocks now, or consistently stronger now. 73% clearance rate over June, followed to 73.4% over May. Well ahead of where it's been for not just the end of last year, the beginning of last year, but over the last 2 or 3 years. That's the best result we've seen in that Melbourne auction market, and certainly is a good precursor for prices growth. Brisbane has improved over the last couple of months, but as I said, we take those Brisbane results with a grain of salt. Adelaide's starting to pick up again after a weaker start to the year on Adelaide standards, where it was the strongest market in the year. And Canberra, yeah, look, it's better so far, its results over June, but last week was a little bit of a disappointed. Looking for a consistent revival in that Canberra market. If you're looking, Rachel, for the latest auction results, you can get them around about 6 o'clock on my LinkedIn page, Dr. Andrew Wilson at LinkedIn, which gives you the capital city snapshot, or the full national report Sundays around about 9 o'clock, which gives you the regional breakdowns for Melbourne and Sydney, and the top 10 sales under the hammer over the week. So lots of good information there for auction markets. If you have missed that latest national auction market report from last week, there is a QR code. You can scan that and you'll get that latest report, which has lots of in-depth information in terms of auction activity in the capital cities. And now we're going to finish off, Rachel, with our great giveaway, which everybody's clamoring for at the moment, the My Housing Market Infinity Suburb Data app. You can get a copy of that on the scan or on the link. You have to get a password from the good folks at Infinity, but it's well worth having because it gives you a real-time insight to what's happening on housing markets. You can filter this. This is for asking prices and asking rents as they are in real time. So you can filter it for price or rent for the state, capital city region or outside capital city region, then suburb, type of house, house unit or townhouse, and the number of beds. We've done this for prices for Blacktown, and you can see there not just the median asking price as it currently is, but also the low and the high. So you know the boundaries around which the market is operating for that particular suburb and for that number of beds, 4-bedroom house in Blacktown, and the number of properties for sale. And you can do exactly the same thing for the rental market, which is showing you there the median, low and high rents for Blacktown, 4-bedroom house, and the number of properties currently for rent. So good information there. And for investors wanting to know what the latest returns on investment are, it also gives you, for those regional breakdowns, the top 10 yields, which is the return on annual rental, return on the current asking price, also the vacancy rate for those suburbs, and the number of properties for rent or for sale. So lots of information there for those in the market to make informed decisions, and that's what we're all about here. Rachael, is informed decisions in the property market. So next week, June house and unit rents, May building approvals, and the latest weekly auction results, and we'll also discuss the latest Reserve Bank interest rate decision. So if you've missed anything today, you can scan that QR code and it'll get you a PDF copy of today's presentation. So there we go, Rachael, done and dusted. Another one, a couple of minutes over, but nonetheless, we've had plenty of information today, and it is important information. Not that it isn't every week important, but it certainly has all that price data and also the inflation data, which is a good lead-in for the for the evaluations of the Reserve Bank next week when they occur. So hope you've enjoyed the first week of the new year, right? And we look forward to seeing you next week.